Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
This week's top stock picks. Today I'm joined by our Director of Research, Shiraz Mian, and he's going to look at Caterpillar, which has just been on fire lately. And I asked him, is this about energy, construction, mining, what? And he's going to give us the whole lowdown. I'm going to talk about NVIDIA. You know, I just did NVIDIA for the top pick a month ago before earnings, and there's a ton to talk about now. So let me just first reference this Bull of the Day article I did last week with the big data picture there. And the reason I looked at NVIDIA as the Bull of the Day is because estimates just keep going up. I mean, it's it's an unstoppable train. So, the things to note here. So I sort of recapped, what were we looking at going into this quarter? Their July quarter that was reported on August 23rd. And a couple of things I want to note here, basically, since March, the street has been way underestimating what was coming for NVIDIA with another big beat and raise. I mean, we can go back to March and look at when this year's top line estimate was at 30 billion and next year was at 37 billion. And, then they jumped 40% into May after earnings. I'm going to show you how much they've jumped lately. I was looking for a big beat, and we got it. I said I expect NVIDIA to beat the 11 billion guidance for the July quarter and beat the 12 billion guidance by at least 2 billion, and they did that. What was worth noting in early August when I did this was that already next fiscal year had jumped 5 billion to 60 billion for 38% growth. So you can see how analysts were scrambling even before earnings. All right. And then, a lot of this background you can get off of this this story that I did in June 22nd. I talked about why NVIDIA could go to a 2 trillion valuation based on the demand for these GPU architectures, massively parallel architectures with chips to just keep getting better. And in May, they announced the Grace Hopper series, which we knew was coming for about 2 years, but they launched it. And what I talk about in this article is that after the May earnings at a Computex event in Taiwan, they said, listen, it's here. So let me just find this, talking about the giant TAM. Jensen Huang has always talked about a TAM of 300 billion in hardware and 300 billion in software. And I think even that's conservative when you look at how enterprises are adopting this. So so the architect of the AI supercomputer is obviously NVIDIA. It's all about the CUDA stack software. And then, so here it is. In late May, they unveiled the DGX GH200. The pivotal moment here, when NVIDIA launched above $350 a share, was when they said that already Google, Meta, and Microsoft were customers for this new large memory AI supercomputer. It's a new class. It's a trillion parameter instrument of AI. And so the big guys were buying it. What I said at the time was the rest of the Fortune 1000 is going to want these in some capacity. So look for those pieces. So let's go ahead and look at the estimates. Where have we come from? We know that. We know we've come from, let's just go down here to the Zacks detailed estimates page. Remember, I just told you that in March, these numbers were 30 billion for this year and 37 billion for next year. And we're in fiscal 24 because the quarter ends in January. Look how much the estimates have ramped, So now we're looking at over 80% growth for this year and 77.7 billion. I mean, this just keeps going higher and higher. Like before earnings, it went up to 60 billion. But after the huge guidance raise for Q3 from roughly, just over 12 billion to 16 billion, another 4 billion bump in guidance, the analysts responded as if NVIDIA is going to do 16 billion every quarter. Now, is that realistic? Well, I think it is. And if you look at the range of where analysts are, we've got 12 analysts here, and the low end is 70 billion. and the high end is almost 90 billion. So, that gives you a good flavor. So now we have to talk about the controversy, though, right? There's a big controversy with NVIDIA's report and a particular data center. So the story all over FinTwit, which is the financial Twitter, where there are some good, analysts, a lot of traders, a lot of people just exchanging ideas on Twitter about stocks. The controversy was that a data center builder called CoreWeave had secured a $2.3 billion loan from BlackRock and a hedge fund, I think Magnetar Partners, and they were using that to buy NVIDIA GPU systems. And so people said, oh, that's why NVIDIA beat so big on the on a quarter, Q2, which they'd already raised guidance for from $7 billion to $11 billion. And then they come in at, over 12.5 billion, 13.5 billion. So it was like the consensus was 11.2, and they come in at 13.5. Well, that's 2.3 billion. But here's the thing: the rumor mill just started churning around and around, and we really have to look at this closely for a couple of reasons. First of all, the loan was not announced until August 3rd. So we don't know if anything that CoreWeave borrowed to buy GPUs was put into the July quarter. We just don't know that. But I did some more investigating, and I thought, well, let's go to the 10Q. So here's the 10Q, 51 pages. On page 24 of the 10Q, if somebody wants to do the math, this is where you can do the math. Total revenue for the July quarter, $13.5 billion. Here's the note here. Here's the key note where NVIDIA explains it. It's hard to see when I highlight it, but I'll just read this to you. One data center distributor customer represented approximately 17% and 13% of total revenue for the second quarter and the first half of fiscal year 2024, respectively. So, and they note, hey, this is exceptional. Noting here on the 10Q, this is exceptional because there were no customers with 10% or more of total revenue for the second quarter and first half of fiscal year 23. So that 2.3, that corresponds to 17%. If you do 17% of 13.5 billion, that's 2.3 billion. Where it gets even more interesting is if you look at the first half, where you see like July through July 30, 2023, that's 20.7 billion. That, if we take 13% of that, that's 2.7 billion. Okay, so where does that come in? Well, the difference between 2.7 billion and 2.3 billion is about 400 million. Exactly what CoreWeave borrowed in Q1. Early in the year, they did this little test where they borrowed money, and NVIDIA was a partner in that, so that they could buy GPUs. Now the question is, we don't know that they're buying all the GPUs or using all the 2.3 billion to buy the GPUs. So that's part of the controversy. And what quarter it was booked in, because CoreWeave is building data centers. They're building a data center in Plano, Texas. They're investing 1.6 billion. So they know they need a lot of GPUs because they're basically like a consultant, like picture like an IBM going out and building these systems for corporations or leasing the GPU time in a data center. So this is something to look at. But here's my conclusion on this. If we go back to the detailed estimates, listen, if everyone's bullish, when I say everyone, Wall Street is mostly bullish on NVIDIA. So if any of these analysts that are up here in this range of forecasting, this kind of revenue as sustainable and not a one-off from a loan that a small data center got, it would be a prime opportunity to stand out in the spotlight as an analyst who said, you know what, I smell a fish here. And so I'm kind of waiting for one of them to do that. They have the resources and the research capabilities to investigate this. So, right now, I think NVIDIA is still a buy. I'm looking to buy a bigger dip, maybe down below 425. But I just wanted to address the controversy and show you where you can look at the math and then listen to where the analysts are at. So with that, I'm going to stop sharing and bring Shiraz in here. Hey, Shiraz, do you have any thoughts on this controversy?
It's an amazing story, Kevin. You know, I follow the earnings beat at Zacks, and when last time, not this previous quarter, but the one prior to that, when they came out and they gave us that guidance, I was just blown away by what these guys were talking about, because a few weeks prior to that release, they had a public comment opportunity where they had discussed business trends. And I just looked back at history for the 10, 15 years I've been doing the earnings job to see if there's any company of a comparable size or even smaller than them that may have dropped a bombshell like that on the market, and couldn't find it.
Yeah.
So for them to then come back in the last quarter and repeat it. And so it's an amazing story. It's one of a kind. The question long term in my mind, and by the way, I own NVIDIA in the focus list portfolio, have been a very long fan. I have no expertise on the tactical near-term side of what the stock will do, like you tell your subscribers. But long-term, next 3 to 5 years, there's no question in my mind that people who hold NVIDIA will be coming up ahead.
Yeah, so NVIDIA, for me,
that's a great story.
Yeah, it's one of the few stocks that I don't even worry about trading it, just because I believe that the growth story is sustainable. And just for perspective, if you go to my DGX article, you know, these DGX boxes hold 8 of these GPU cards. Now, these most advanced Grace Hopper GPU cards, they cost $40,000 each. So one of these DGX boxes with 8 of those, that's like a mini supercomputer, can run anywhere from $150,000 to $300,000, depending on how it's set up. And corporations want to stack these together to create those massively parallel architectures. So that's why the demand is there, and they're all scrambling to build these.
I have a feeling, Kevin, that if I let you speak, you can speak for an hour about NVIDIA and Jensen Huang and what an amazing person he is. And they took over gaming, and they took over the cryptos, and now they're taking over AI. Perhaps someday they'll take over the world. But I wouldn't let you steal the thunder from Caterpillar. And Caterpillar may not be as glamorous as NVIDIA is, but let me show something here. So what I have here is Caterpillar 1-year performance relative to the S&P 500 and the Zacks industrial sector. Caterpillar is the blue line, and as you could see, S&P 500, the green line there, a way outperformer, not perhaps in the cookers NVIDIA, but for a stodgy company, Caterpillar isn't doing bad at all. And now I'm showing here a much longer time span, the dollar stock price, 10-year performance. And as you could see, it's around 280s now. It's a bit down, like $10 or so from its high. So Caterpillar, as I say here, in the clouds, it's really hasn't been at this level ever. So that begs the question, it must be expensive. And that's what I try to address in the next couple of slides here, the valuation question. With respect to the core business, the end markets, the demand trends, the dealer inventories, all of those variables are perfectly lined up for Caterpillar. So whether that's construction, it's global infrastructure, it's mining, it's energy, they aren't firing on all cylinders, but there's been so much underinvestment over the last many years that on the outlook front, the going is very favorable. So here I'm showing Caterpillar, the forward 12-month PE. And as you could see, I'm taking a very long view of this valuation question. Currently trading at 13.6 times. Over the last 10 years, it has traded as high as 32.6, as low as 9.1, with a median of 16.5 times. When you look at Caterpillar relative to the S&P 500, again, a 10-year span, it's trading at a significant discount to the broader market. And the broader market is a lot tech, and it has a lot more exciting stuff, and not just the stodgy industrials. But since these companies have been around forever, a company like Caterpillar, that is, it's always useful to see where it's trading relative to the market as well. And it's hard to tell exactly the magnitude of discount to the market, and that's exactly what I've done in this slide, where I'm presenting the PE of 12, the forward 12-month PE for Caterpillar as a proportion of the market PE. So as you can see here at the bottom, it's currently trading at 0.7, meaning 70% of the S&P 500 multiple. And over the last 10 years, it has traded as high as 1.9, as low as 0.53, with a median of 95, meaning it trades roughly in line with the market, or the median has been just a 5% discount. So relative to the 5% discount, it's currently trading at a 30% discount. So even though the stock is as high as it is, the valuation question is, any way you look at it, far from stretched. In fact, one could reasonably argue it's a very good value. And here's the estimate revisions trend. The red line here, and I couldn't help giving it the headline. Those of you who have cats know when their tails are up, and this cat's tail is definitely up. The red line is the 2024 estimates. The light blue line is the 2023 estimates. And look at the slope of that line. It may not be NVIDIA, but if you didn't know this was for Caterpillar, you would probably think it's some high-end tech stock whose estimate revisions trend we are showing here. So, what do you think, Kevin? It's not exactly NVIDIA, but it's not bad.
I tell you what, it's a flag in the wind of no recession, right? I mean, we look at the cyclical sectors that Caterpillar is exposed to: energy, mining, construction. And, you know, we were worried about a banking crisis 6 months ago. You look at this stock, there's like interest rates at, 5.5%. Who cares? There's this boom, cyclical boom still happening. This is amazing.
Thanks, everyone, for watching. If you like the content you saw here, please check us out at Zacks.com/promo.